Jake and Mark both started making $20,000 a month from AI. Jake scaled up his lifestyle. He financed a $90,000 BMW, took out a mortgage on a McMansion, and plowed every remaining cent back into flashy AI side hustles. AI art, prompt marketplaces, influencer courses. He looked like a tech millionaire on Instagram. Mark drove a 40K Honda, lived in a duplex, and quietly diverted his profits into 9 very specific, very separate AI tools. Jake laughed at Mark for moving too slow. Then, the economy choked. AI hype collapsed. Freelance rates cratered and ad revenue disappeared. Within 90 days, Jake couldn't make payroll on his inflated lifestyle. The bank repossessed the BMW, called in his loans, and wiped him out. Meanwhile, Mark's primary income also dropped by 50%, but he didn't even flinch. He didn't have to downsize, he didn't have to lay anyone off, and he actually doubled his net worth during the recession. Jake thought the goal was making money with AI. Mark knew the goal was building a fortress. He did it using a hidden financial blueprint called the AI 9 tool stack, a strategy the top 1% use to ensure going broke is mathematically impossible. Most people use AI to replace a paycheck. They build side hustles that are one algorithm change away from extinction. The rich use AI to build equity, automate ownership, and erase vulnerability. Mark didn't stumble into this. He tested 517 AI tools over 18 months. He discarded 508 of them. The 9 he kept weren't the ones on Product Hunt. They were the infrastructure underneath the wealth printing machines of the top 1%. And once they're activated together, they create a self-reinforcing system where a crash doesn't kill you, it feeds you. This stack is divided into 3 rings. Ring 1. Acquisition tools that find and close hidden cash-flowing assets. Ring 2, cash flow tools that optimize and automate revenue without employees. Ring 3, defense tools that make taxation, inflation, and litigation mathematically irrelevant. Jake never built a single ring. He just chased money. Mark built all 3, and that's why he's immune. Here are the 9 tools, in order. The first tool is a macroeconomic AI that processes central bank speeches, liquidity flows, and credit spreads in real time. It gives Mark one output, a risk-on or risk-off signal updated every 72 hours. When the signal flips risk-off, he automatically shifts capital into cash equivalents and hard assets. When it flips risk-on, he deploys aggressively. During the last crash, Jake was caught leveraged long on everything. Mark's wealth compass told him to exit equities 3 weeks before the S&P 500 peaked. That single move preserved capital that he later used to buy assets at 40 cents on the dollar. Most investors follow headlines. Mark's tool follows the money that moves before headlines. The second tool scrapes thousands of business for sale listings, private equity filings, and bankruptcy dockets every minute. It uses natural language processing to find motivated sellers who are mispricing their cash flows. It identifies a laundromat where the owner forgot to update the asset value after a renovation, or a micro SaaS with churn under 5% that's listed for 1.2x annual recurring revenue because the seller is retiring. The deal sniper then generates a first draft offer letter with terms skewed to seller financing. Mark acquired 4 cash-flowing assets in 2 years using this tool, none of which required his own capital up front. Jake, meanwhile, was still chasing clients for his prompt writing service. This tool is an AI-driven revenue engine that can be bolted on to any acquired business. It analyzes the customer journey and identifies immediate margin leaks, things like abandoned cart flows, underpriced upsells, and churn triggers. Once implemented, it doesn't just suggest fixes, it generates the copy, the email sequences, and the A/B test variants, then deploys them autonomously. Mark used the cash flow printer to take a struggling B2B data subscription from $8,000 a month to $34,000 a month in 6 months, with 0 added headcount. Jake's idea of scaling was paying more virtual assistants. The fourth tool is an AI-powered tax strategist that studies jurisdictional arbitrage, cost segregation, and international tax treaties. It reclassifies Mark's income into the lowest legal liability structures. It identifies credits, R&D, energy, opportunity zones that most accountants miss. During the year Jake paid 37% effective tax on his freelance income, Mark's blended rate was 11%. That delta compounds into a multi-million-dollar gap over a decade. The tool also acts as a real-time audit shield, cross-referencing every deduction against IRS rulings, making an audit nothing more than a paper confirmation. The fifth tool is an AI-powered legal and compliance engine. It monitors every asset Mark owns and recommends entity structures, series LLCs, Delaware statutory trusts, or Wyoming holding companies that insulate each asset from liabilities of the others. If a tenant sues Mark's rental property, his stock portfolio and business equity are legally invisible. The Moat Builder also scans for frivolous lawsuit patterns in the local court systems and preemptively adjusts insurance coverage. Jake, with all his assets under his personal name, was one bad accident away from bankruptcy. Tool 6 solves the biggest wealth killer: idle cash. The Velocity Engine is an AI treasury manager that continuously sweeps excess cash across high-yield accounts, money market funds, and short-term bonds to capture the highest risk-adjusted yield by the minute. It also automatically allocates a fixed percentage into a collateral pool that backs strategic credit lines. That pool lets Mark access cheap leverage to acquire more assets without ever touching his core liquidity. When the market crashed, Mark had immediate buying power. Jake had a frozen credit card. Tool 7 is a synthetic AI boardroom. It mimics the decision-making frameworks of billionaires and private equity titans, people like Sam Zell or Thomas Barrack, by ingesting their public letters, deal transcripts, and investment theses. Mark feeds any major decision into this invisible partner. It stress tests his reasoning, exposes cognitive biases, and outputs a probability-weighted range of outcomes. When Jake was deciding whether to lease the BMW, he asked his ego. When Mark was evaluating a third acquisition during a recession, he consulted the invisible partner. The AI gave him a 72% probability of a 40+ IRR. He moved. The deal became a cash cow. The eighth tool is an AI valuation model that scans Mark's entire portfolio monthly and identifies which assets are underperforming their capital allocation. It recommends pruning. It might suggest selling a rental property that has reached peak appreciation and reinvesting the equity into a higher-yielding private credit deal. This tool single-handedly increases Mark's portfolio velocity by 18 to 22% per year, the equivalent of adding another income stream without acquiring anything new. Most people just let assets sit. Mark's system constantly rebalances toward maximum efficiency. The final tool is an AI estate and trust optimizer. It dynamically structures assets to pass to heirs with zero estate tax leakage, using vehicles like intentionally defective grantor trusts and spousal lifetime access trusts. It also generates a digital constitution for the family office, encoding investment principles that survive multiple generations. This ensures Mark's fortress doesn't crumble the moment he steps away. Jake, who had no will and no structure, would have left his family a legal nightmare. Mark's descendants will receive a machine that prints for a century. No single tool made Mark rich. The synergy of all 9, arranged in 3 rings, created an unbreakable system. The Wealth Compass and Deal Sniper acquire. The Cash Flow Printer and Velocity Engine multiply. The Tax Eraser, Moat Builder, and Legacy Shield protect. The Invisible Partner and Asset Multiplier optimize. Most people dabble with 1 or 2. That's like building a house with a door but no walls. Mark's fortress has no cracks. When the economy choked, his acquisition tools found panic sellers. His cash flow tools wrung out more profit. His defense tools kept the government and creditors at bay. He didn't just survive, he swallowed the opportunities that Jake's collapse created. The reason this stack isn't taught is simple. Wall Street, banks, and the entire financial advisory industry profit from complexity and dependency. They sell mutual funds, insurance products, and managed accounts that bleed 2% a year. They never tell you that AI now gives an individual the analytical power of a sovereign wealth fund. Mark spent 18 months testing 517 tools to find these 9. The barrier isn't intelligence, it's the willingness to stop chasing shiny AI side hustles and start building the fortress. Jake saw AI as a faster horse. Mark saw it as the architect of permanent wealth. Every day, another Jake buys a course that promises 10K months. Every day, a Mark is quietly stacking assets with tools that the mainstream ignores. One builds a lifestyle on a fault line. The other builds a fortress on bedrock. The AI 9-tool stack is not a product, it's a protocol. And in the next decade, it will separate those who get wiped out from those who become mathematically immune. The tools exist. The choice is already made by the side you're on.